welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. Before anything else, we are going to start with a big story in the startup space today. It's about an acquisition, a merger gone completely wrong, gone completely dead in a bitter way. We are talking about the long-awaited acquisition of OYO-Zo Rooms by online hotel aggregator OYO. Remember, this deal is in the works since November 2015. In fact, SoftBank came out with a presentation, investor presentation in March 2016, where there was a slide where it clearly mentioned acquisition of OYO-Zo Rooms is a line. But in a development today, OYO Rooms has come out and said that though it explored an acquisition of OYO Rooms, it decided not to pursue this and that the non-binding term sheet expired in September 2016. Now that's one leg of the story, but the interesting part here is that OYO Rooms has hit back and how. They've said that the acquisition was indeed done in March 2016. OYO is acting in bad faith by really reneging on the deal and that they will take whatever action is appropriate to enforce their rights. Now, I don't know how many precedents there are in such a scenario where there is such a stark difference between what the buyer feels and what the seller sells about a particular deal, but clearly in this case they are not on the same page. Now, if you look at recent M&As that we've seen, be it Flipkart, Snapdeal, though that was also pending in the works for 6 months, you ultimately had Snapdeal issuing a statement saying that they've decided to go their own way and, things ended there. But on this case, nobody's clear on what really happened. If SoftBank went ahead and announced the deal, why did they do it if both parties indeed did not sign on the dotted line? We will try and get more insights there, but Rahul, what are you picking up at this point? What options does OYO Room really have, considering it shut down its app and website, and I don't know how many employees it currently has?
Chandra, it's very, very surprising in the manner in which the entire events have played out over the last 2 years. So as you rightly mentioned, October 2015 was when, the deal supposedly got through. You had SoftBank also reconfirm it. During that time, you had the most number of employees of OYO Rooms really join OYO. So that has happened a long time. A lot of them are already working for OYO. So it's not really clear on one hand, while OYO says they have walked away from the deal talks. OYO Rooms has issued, as you said, a very strongly worded statement that that's not the case. The acquisition was completed by March 2016 and it's in bad faith as far as OYO is concerned. The options that really lay ahead of OYO Rooms, I have been talking to some sources who are privy to the developments as far as OYO Rooms are concerned, and a legal angle is not something that they're ruling out because they tell us that they are extremely shocked at what has come by from OYO. Also, one big question that will come by, if the term sheet really ended in September 2016, what really took OYO so long to come out and really make the statement, because there have been murmurs doing the rounds for quite some time now that the acquisition did not get through. But OYO Rooms clearly seems to be on a bad footing because they have shut down their operations. In fact, after murmurs of it grew that, the founders will get 7% stake, the acquisition is complete. They shut down both their app and website, leaving a lot of customers fuming because they weren't informed about it. So, OYO Rooms has largely shut down all its operations. A large chunk of their employees are already working with OYO, while OYO says a lot of them have really moved on in their personal capacity. So for now, OYO Rooms on a very bad footing, but a legal tussle is not something they're ruling out from sources of what I understand.
Thanks for that perspective, Rahul, and I'm sure you'll be in touch with both parties over the coming weeks to really piece together this puzzle and, of course, the way forward. In fact, we have Naganand Doreswamy, the founder of Idea Spring Capital, joining us on the phone line from Bengaluru to give us perspective on what this means from the vantage point of an investor. Mr. Doreswamy, thank you for joining us on Startup Central. And, on the face of it here, it really looks like a David versus Goliath scenario where, the Goliath, like OYO, managed to drag a deal on its feet and finally decided that it's not going to pursue it. By that time, OYO Rooms had shut down its app, its website, and it was almost in a helpless situation. What do you really make of the way this entire deal played out?
Yeah, so from an outsider perspective, since I don't know these two companies really well, but definitely 2 years for a startup to acquire another startup, is a very, very long time. I've not seen this happen. I'm wondering as to why it took so long for the deal to fall apart. So and from Zo perspective, as an investor, I would always say that till a deal is consummated and the money is in the bank, or in this case, the shares were in the bank, because I read that they were going to get 6 to 7% equity in OYO once the acquisition was complete. But till that shares are in the bank, then they should have continued the operations. I'm not sure why they shut down. I don't know if they ran out of cash or other reasons. But I wish that continue. But 2 years is definitely a long time for a startup to acquire another startup.
Right, in such a situation, who is the onus on? I mean, is it the buyer, the seller? Because both of them are on different pages here. The seller claims the acquisition happened in March 2016. But the buyer claims, they just explored the idea, but that the non-binding term sheet ended in September 2016, and yet to come out and announce that the deal is no longer happening, it took them, nearly a year. I mean, more than a year, in fact. They're only telling us in October that they've decided not to pursue the deal. Are there really precedents? Is this something really unusual? And what does it mean? Because, exits are already very difficult in the Indian startup ecosystem. There have been far and few successful exits. So what does it all mean as far as the startup ecosystem is concerned?
Yeah, it's definitely strange that OYO took so long. I'm not sure what are the reasons behind that, but a year and a half is a very, very long time for someone to come back and say that they're not going to announce it. In terms of precedents, I don't know of any direct precedent, but I know of large companies when they're trying to acquire each other. The whole process will go for 18 months, and deals can fall through for multiple different reasons because of anti-competition or FCC not agreeing for that. So that the deals have fallen through, but mostly it's in the public. But in this case, nothing was in the public for over a year, and suddenly there's an announcement, and that definitely is unusual, and I should say. But in terms of actual papers being signed, the deal being consummated, I think time will tell, because people will have to now look at the legal documents, and if the deal is, then obviously there will be paperwork that to reflect that deal is done and the shares will be transferred and so on and so forth. So I don't know whom to believe at this point of time, but would really wait and see what paperwork comes to the public scrutiny and what has been signed between the two companies, because I'm sure each company will defend themselves, but unless until that has been scrutinized, it's difficult to speculate on what's happening.
Right. How does this really change things from an investor perspective, Mr. Doraiswamy? I mean, will people be more wary of M&As going forward? Because, even M&As that we've seen in the past, they've mostly been an acqui-hire scenario where, the intent was really to get hold of the talent, and then, the company that's acquired really goes nowhere. So what does it mean as far as exits are concerned? And will investors be more wary when it comes to M&As? Because, that's clearly one clear exit option here. OYO was and is a much bigger entity compared to Zo Rooms, which was a threat, but, at a smaller scale. So what does it mean in future M&A scenarios, future exit scenarios for startups?
Yeah. See, if the deal fell through because of business reasons, then I think it will be well accepted. People will say, all right, it didn't make business sense and hence the deal didn't go through. But there are two things that one needs to be circumspect about in this particular case. One is why it took 2 long years for this to come out like this, and that needs to be looked into. And the second one is to see if any governance or any contracts were violated, right? If contracts were violated, then that will leave a bad taste in future M&As. But if contracts were not violated, if the governance was followed, and if the deal fell through for business reasons, I don't think it will have a significant impact. But that being said, exits are always good. But we all know that M&A is a risky proposition, and we will see some deals falling apart.
Right. Before I let you go, Mr. Doraiswamy, just want to understand, you said if it's business reasons, then it makes sense. But what if you've kept an entity waiting for 6 months, for 8 months, and even 2 months is a lot of time for a startup that's losing money on discounts, it's really struggling for survival. So does that really hold water here, that, you keep postponing the negotiations or the terms of agreement, and the startup is running out of time because, they have limited runway, limited cash to run daily operations, to also dole out discounts, to also acquire customers. So, when you say business reasons, is that a valid reason at all in this scenario?
So when I said the business reasons, I'm talking about how people view the M&A, right? If one person is playing the game the wrong way, then it is not going to be well accepted in the industry. For example, if knowingly you're dragging the feet, saying, I will negotiate and keep pushing it, then it will be looked into bad taste. But at the same time, I think we need to look at both sides of the equation. If you were Zo Rooms also, like probably 3-6 months is what I would have waited for to say whether you're going to acquire me or not, and then look at other aspects. But that's why I'm saying we need to understand this a little better to say what was the actual reason this happened, why it took so long. But clearly, when I say it for business reasons, I'm saying if it doesn't make business sense, then the industry will not be affected. But if one person is not playing fair, then people will become a little bit more cautious. So that is what I think I would like to look at, what comes out of the discussions or when these guys talk in public as to what happened and review that.
Right. Finally, sir, just one more question to you before I go to Vaibhav Parekh of Nishit Desai Associates. From a legal standpoint, I'm sure Vaibhav is, the better judge for this. But on the face of it, can anything really happen? What options do you think Zo Room has? Even if you can't go into details, have there been instances of, say, one company suing the other for not acquiring them, or for reneging on such an M&A deal? Have there been instances? What's the likely scenario here?
I think Vaibhav will be a great person to talk about it. From my perspective, from a legal angle, it all depends on what documents have been signed and what is the language that is put in there. So it is very, very hard for me to comment on what is happening, because when things go to court, everybody will look at the legal language and how to interpret it and so on and so forth. So it all depends on what has been signed between the two companies, what has been agreed upon, and one has to review that very closely to say what is going to happen. But I'm sure Zo Rooms, in his position, will try and get what they should be getting out of this whole thing. But I really cannot comment, and one needs to look at the documents to comment on it.
Right. Right, on that, thanks so much for joining us, Mr. Doraiswamy. And we in fact have Vaibhav Parekh joining us via Skype from Bengaluru. Hi Vaibhav, thanks so much for joining us on Startup Central. Vaibhav Parekh, of course, heads the M&A and PE practice at Nishit Desai Associates Bangalore. So no better person to talk to on this. Vaibhav, Nagaland was just saying that you are the better person to talk to when it comes to the legal aspects of this deal. So what options does Zo Rooms have, and what do they mean when they say we will enforce our rights? OYO says the non-binding term sheet, went away in September 2016. 1 year later, they are coming and saying we're not doing this deal. What can Zo Rooms technically do in such a scenario?
Yeah. So I think Nagaland rightly said that a lot will depend on what documentation both companies have entered into. From what I hear in the newspaper and media, and what OYO Room says, that they had only entered into a non-binding term sheet. The very fact of non-binding term sheet means that the transaction is not binding and something which you can't enforce on. And as a result, Zo Room, if it is true that they only entered into a non-binding term sheet, then as a result, Zo Room does not really have a lot of opportunity or lot of legal backing to go and take actions against OYO on the non-binding term sheet. If they had entered into any binding term sheet, or they have entered into a share purchase agreement or some kind of agreement which is enforceable, then Zo Room has a lot more ability to take any action in the court against OYO Rooms. Now, having said it, when you go to the court doesn't look only at what you've written. It also looked at the conduct. It also looks at whether there were any other promises made which is based on behavior or based on any oral contract, because contract doesn't need to be in writing. It can be even oral also. It can be also be done by behavior. So if there was no contract which is there, in no binding contract which was signed, I would suspect that Zo may go and try to take a case which says that, look, you promised me, based on which I ended up actually going and closing my business, or I transferred my employees to you. I did this, I did that. All those was done based on a premise that you will acquire me, and now you are not acquired me, and as a result, I have suffered a damage. This is a possible line if they could take. Having said it, they actually will have to prove by evidence in court of law that this is something which OYO had promised. Now, if it is a contract, it is easy to say what is written and what is not. That if it is a purely based on behavior, based on order, then it becomes very difficult. Yes.
Right. Vaibhav, just one quick point there. I remember there was an investor presentation done by SoftBank, which is, of course, OYO's biggest investor, sometime in February or March 2016, where they had a slide of, their portfolio companies. There was a slide on OYO, and right beneath that, there was a line which clearly said acquisition of OYO, of Zo Rooms. Now, there was no description, is this binding term sheet, non-binding term sheet, but that line, acquisition of Zo Rooms, was taken as a sign by many of us who went ahead and confirmed that, it is a done deal. I mean, why will SoftBank go and say in an investor presentation, acquisition of Zo Rooms, if, things are so tentative? So do you believe there was a disconnect here between the investors and the management of OYO in the way this panned out?
See, I don't think, first of all, the line which is there in the investor presentation by itself can suggest that the acquisition is a done deal. There have been situations where acquisitions has fallen through even at last moment. So if the investor presentation simply talked about that this is the intent, because anyway it was out in media at that point of time, then we can assume that that line doesn't have any bearing on what OYO or SoftBank intended to say. It doesn't seem there's a disconnect in my mind. It only seems that there was a situation, or there was a time where OYO was acquiring Zo, and everybody believed that it is just a matter of time that the acquisition will happen. I don't think at that point of time the investor or the management would have believed that it may not happen. So they may have jumped the gun by wording it that way to some extent, but I don't think that particular statement by itself would have impact to this particular dispute or what is going on right now.
Right. Thanks so much, Vaibhav, for those insights. So at least right now, Zo appears to be on a weak footing unless it's able to prove by way of contract or documentation on just what sort of commitment they had from OYO. But this is clearly sad news for, all the employees and entrepreneurs and, the founders of Zo Rooms who are perhaps pinning hopes on this deal going through. But thanks so much, Vaibhav, on that note for joining us on Startup Central. We're taking a break at this point, but don't go anywhere, because right after the break we have our weekly funding meter to look forward to with Arun Natarajan of Venture Intelligence, who's going to tell us who raised what, and we end the show by telling you the first robot in the world that actually has citizenship from a country. You don't want to miss this. Stay tuned to Startup Central. got cut. Welcome back, and as promised, we go to Funding Meter by Arun Natarajan of Venture Intelligence. Arun, thank you so much for joining us as always on ET Now, and take us through, who raised how much this week, considering we just came back from Diwali, a long weekend. How did the deals really pan out?
Sure. This week, we've tracked about 11 investments worth about $23 million. This compares to the previous Diwali week, that is, where we saw 7, investments go through worth $33 million. So essentially, both of these weeks, we haven't seen any blockbuster kind of, investments take place. However, having said that, in terms of the number of deals, which is quite healthy, as well as, in terms of the spread of these deals across stages of investment, especially, things, are quite encouraging in that sense. So the largest of the investments that got announced this week was the $7 million investment into the EdTech company Topper. And this investment is interesting in the sense that 8 Roads Ventures, which is formerly, Fidelity's private investment arm, this is the first investment they've made in India in the education space as such. Previously, all their investments have either been in the healthcare space or, enterprise technology as such. So that was quite interesting. So the second investment, a $6 million follow-on investment by Sequoia and other existing investors into the juices, brand Raw Pressery. And then another interesting investment, $3 million Series A investment led by Matrix Partners into Zip Loan, which is into the SME lending space, and obviously it's an online tech company as well. So all in all, a good spread of investments. All the rest of the investments in this, have been in the early stage, and especially in the seed and Series A, which, as we have discussed before on the show, have been where the biggest of the crunch has been this year so far. So all in all, I would say post Diwali, a good week to kick off, business with.